Fidelity just told every public company on the planet, buy Bitcoin now, not in 5 years, not when the time is right, now. At Strategy World 2025, the $4.5 trillion asset manager laid out a chillingly bullish case, while BlackRock's Larry Fink doubled down, recommending a 2% allocation across the board. If that happens, we're staring down a market cap of $18 trillion and a Bitcoin price over $850,000 per coin. Let's take a listen to what the VP of Research at Fidelity Digital Assets, Chris Cooper, had to say. We'll pull up the screen here. Here we go.
And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin?
Very interesting thoughts from Chris there. Now, the interesting part here is that Michael Saylor says that's just the beginning. He's now predicting that AI will ignite a tidal wave of demand, pushing Bitcoin valuations that make BlackRock's target look tame. His latest projection, it's way higher than you think, and he's betting MicroStrategy on it. All this while Fidelity's ETF sees surging inflows, gold looks ready to pass the price action baton to Bitcoin, and governments, yes, plural, are now making historic public moves that could reshape the global financial landscape. This isn't hype. It is indeed a coordinated global shift, and the FOMO has just begun. Stick around because we're breaking down all the numbers right now. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions. So, of course, Fidelity's Chris Cooper was presenting the investment case for Bitcoin at Strategy World 2025. I believe this is the third very Bitcoin-centric one, if I'm not mistaken. And so he had some interesting things to say. Quotes here, corporations often focus on volatility, but volatility isn't risk. Permanent capital loss is. He cited inflation and currency debasement as the real threats facing balance sheets today, showing how even traditional safe havens like U.S. Treasury bonds have suffered negative real returns over time. And again, this is a thing that a lot of people that are chasing yield forget to account for. Like, what's your actual purchasing power at the end of the day? And then he says to address concerns about Bitcoin's volatility, he offered two practical strategies. One is position sizing, and two is long-term thinking. He said Bitcoin doesn't have to be all or nothing. It's not a switch, it's a dial. I actually quite like that quote. He said even a 1 to 5% allocation can significantly improve a corporation's risk-adjusted return while limiting drawdown exposure. And actually, we're friends with some people that have been trumpeting this very same narrative. Do you want to maybe chat a little bit about our buddies over at Rockstar?
Oh yeah, these guys have been saying the same sort of thing. They've been real estate experts for so long, and they're helping their members see like, hey guys, you got to take a look at Bitcoin. But I got to love it. There's something about the think about a long-term time horizon and also correct positioning for your life circumstances. I feel like that should be obvious. Like he puts that out as like great advice. It kind of reminds me, even his talk in the beginning, again, I could be off on this, but it reminded me of, do you remember, what was it, like the Melvins? No, it was the two guys from Office Space that just sat you down and go like, what exactly do you do here? Like you're going to these companies and being like, you should increase shareholder value. And I can't think, and like they're sitting there going, damn, what have I been doing this whole time? I've just been burning capital for no apparent reason.
What would you say you do here?
Right?
Yeah.
It seems so obvious to us in the space because we've found something that allows us to tap back into savings again. And it's incredible to watch even people at this level, our friends at Rockstar, they're all starting to get it. But realistically, at the end of the day, it's just going back to savings. And I love it. I absolutely love it.
Yeah. And it was really cool to see the Rockstar guys presenting on stage in front of like 1,100 real estate investors and showing charts side by side is here's your regular portfolio of owning a few properties. And here's your portfolio owning a few properties plus maybe 5 or 10% exposure to Bitcoin. And it wasn't not even in the ballpark, not even close. You blew them out of the water. And this Fidelity and Rockstar real estate that we're talking about, it's very much in line with BlackRock and their strategic, allocation that they've been trumpeting. And, so they had Robbie Mitchnick, head of digital assets at BlackRock. He was at token 2049, which, oh, good Lord. But regardless, he's talking about how institutional views on Bitcoin could dramatically shift if it can behave independently of risk on equities. And so he stressed that Bitcoin trades with low or even negative correlation to left tail events. Then it becomes potentially a very important portfolio asset to all manner of institutional portfolios. And in his conclusion, he suggested that Bitcoin could transition from a speculative bet to a strategic necessity in the eyes of large investors. His quote was, "The conversation goes from, is it too risky for us, to it might be risky not to own any." And that's something we've definitely heard in the Bitcoin space. And furthermore, to mention their allocation preference, Larry Fink's gone around and he's been saying, that sovereign wealth funds, they should be putting in 2 to even 5%. And that, again, that's a dramatic shift just in this past calendar year. He's saying you should at least be having 2% allocation. And when you go and you do that back of the napkin math, it's something like it puts you up in the range of what I think it's in and around between $800,000 and $900,000 per coin.
Yep.
If there was that 2% allocation across the board. So it's pretty wild. And the interesting thing is we're starting to see this actually play out. So earlier, just about a week ago now, Fidelity was like, it looks like gold that just had a pretty epic run, especially for gold.
Especially for a dead rock.
Yeah, exactly. It just had a pretty epic run, but Justin Timmer he's at Global Macro at Fidelity. He said that it's Bitcoin's turn to take the lead and that there's going to be like a passing of the baton. And I mean, what has very much happened, even just price wise, if I flip over to we're at 102,000. We were up in mid 103s earlier. Like we've been having a good month. Like it's been pretty solid. It just a month ago we were in the 70s. And we're
holy shit, that was a month ago.
yeah. It's again.
Oh God, I love Bitcoin.
For such a low time preference bunch, our memories are very high time preference.
Yep. Nope. Fair enough. Yes, I'd like to congratulate everybody. We've now re-entered the "you were right" phase of the Bitcoin cycle. Enjoy it while it lasts, right? Take it in, breathe it in.
Yeah.
It's girlfriend's time. Totally fine. Don't tell the wife. We're all okay on that. But even, I just got to add, jumping back for 1 second too, I couldn't help but think about it. But I love, like, Leon Wankum was at that Rockstar event as well too.
Yeah.
And these guys do an amazing job of showing how just the smallest little allocation can do huge things for your portfolio. And what I can't help but think about is, like, yes, even a little bit amount of freedom is good for everyone. Everyone needs at least a little bit, and it just boosts everything right up.
Yeah, yeah. And I mean, just the price action is not the only indication that gold has indeed passed the baton to Bitcoin. The ETFs, BlackRock's Bitcoin ETF surpassed gold, the gold rival, with $6.96 billion in inflows this year. So once again, gold tends to go first, and then Bitcoin replicates that. And so I mean, all of this points to some of the reasons why Saylor's probably so damn bullish lately. So there's a couple clips of his that I want to play. One where he's talking about how AI is going to be responsible for massive amounts of productivity and thus purchasing power in Bitcoin. And then another where he's talking about the size of Bitcoin as a global asset as it matures. Let's take a quick listen to him here.
Companies are going to create extraordinary products, extraordinary services. There's going to be a 100x increase in productivity. There's going to be a 100x increase in everything. We're going to produce more of everything in every way that everybody can imagine. And if you're a corporation, if you're a private actor, if you're a capitalist, what are you going to do with that capital? You're going to roll it into Bitcoin. The AIs are going to want to buy the Bitcoin. The companies are going to buy the Bitcoin. The demand is going to be for the most scarce, desirable, liquid, fungible capital asset. And so the explosion of productivity with digital property and digital intelligence and digital labor will create an explosion in demand for digital capital. And I think all of those are just mutually beneficial trends. And if you're a company, you just want to figure out how your shareholders benefit, how your customers benefit, how your employees benefit from this trend.
And let's take a look at this second clip of him where he's talking about Bitcoin's market cap in the coming 21 years. Here we go.
We see an industry that's growing from 2 trillion to 200 trillion. You know, when Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold.
So, I mean, again, 200. Nathan, do you want to do some napkin math? I feel like you've already done this, but let's do some quick napkin math. A $200 trillion market cap for Bitcoin. What's our per coin price in that realm?
Easy back of the napkin is from 2 trillion to 200 trillion. We're looking at 10 million per coin. So if I'm going a little more specific, it's going to be just slightly shy of 10 million per coin, something like 9.5 over the total 21 million. But of course, that's not even accounting for loss and all that fun stuff as well, too.
Holy hell. Yeah, it's pretty wild. And again, so I see people that when people are chatting about, oh, are we celebrating corporations and governments and all this kind of stuff, you know, and there's this, in my opinion, there's a completely misguided opinion that other like large institutions and governments getting into Bitcoin somehow co-ops it. That's bullshit. That's total bullshit, because what it does is it puts a level playing field for all. And if you're stacking sats, but there's also governments and institutions around the globe stacking sats at the same time, even though they are perceived as and rightfully labeled a lot of times as potentially your enemy, the thing about Bitcoin is your enemy being able to use Bitcoin actually makes it better and stronger for you. And this is something that Jeff Booth often says. The fact that anybody can use it, like, did you really think that governments and corporations were just going to stand idly by as every average pleb stacked a completely new reserve asset on the globe and they just sit it out to the bitter end and then switch over. No, they're going to understand what's going on, and they do understand what's going on. Again, Fidelity alluding to that, governments will be significant Bitcoin investors in 2025. They said this back in January, and we have plenty to talk about in that realm. But why will governments be significant buyers in 2025? Well, they know what's up. They know that global M2 money supply is skyrocketing, and Bitcoin tends to follow that. It lags, but it tends to look, it's like perfect lockstep with M2 money supply. And look what money supply has done. And Bitcoin is just keeping up. It's I fully anticipate it's going to follow along with M2 money supply here. So what was the thing you were saying before we started? They're both the
they're both the fireman and the arsonist. The government gets to come in and then print and then try and clean it up and then take advantage of it now too. They're going to be capturing their own kind of inflation spread.
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions.